In this video, I'm going to review the book Why Gold? Why Now? The War Against Your Wealth and How to Win It by E.B. Tucker. Tucker is a writer, researcher, and investor who has been heavily involved in the gold industry for many years. According to Tucker, it took him 25 years to accumulate the knowledge, but only 23 days to write this book. The purpose of the book is to let people know why they need to own gold now, as well as how to acquire it. The first half of the book covers why gold is needed as an asset now more than at any other time in the history of finance. It begins with the history of gold, going all the way back to coin clipping in ancient Rome, showing how, since the beginning of time, governments have been debasing their currencies to silently steal wealth from their citizens. Since ancient Rome, the debasing of currencies has only escalated. In fact, since January 2020, the US government has printed 80% of all dollars in existence. Gold is called sound money because of the sound it makes when merchants ping the two coins together. This is called the ping test. Merchants would do this to make sure that the coins were pure gold and had not been clipped or debased. Because gold is sound money and has a finite supply, it is the ultimate protection against the infinite money printers of the US government. Tucker also gave examples of how, throughout history, people have flocked to gold when their wealth is at risk because gold cannot be traced or debased. For this reason, governments have outlawed the ownership of gold on several different occasions, including the US government's bans in 1933 and 1971. According to E.B. Tucker, the stage is set for gold to become the most sought-after asset in the world, leading to a massive rally in its price. The second half of the book focuses on how to acquire gold. Before buying gold, the first step is to decide what portion of your portfolio to allocate to the metal. Although E.B. is ultra bullish on gold, he still believes that it should only take up a small portion of a portfolio, as little as 3%. There are several different ways to own gold. You can buy an ETF, the stock of a miner, a royalty company, or physical gold. Although all of these assets provide exposure to the price of the metal, physical gold is the way to go. Gold bars are the foundation of any gold portfolio, and physical gold always comes first. Not only is physical gold the foundation of a gold portfolio, but it is the foundation for wealth in general. When buying, it is important to note that the heavier the gold bar, the lower the premium to buy. For example, buying grams of gold would be extremely inefficient, as you would pay significantly more in premium versus buying an ounce or more. Once the amount of physical gold able to be stored comfortably is maxed out, investors can receive additional exposure through funds. GLD is the largest exchange-traded fund that offers exposure to gold's price. Another option is gold stock miners. Gold miners can be volatile and provide what amounts to leveraged exposure to gold. This can be a lucrative trade, but it requires putting in the work to understand each mining company in depth. The final way to get gold exposure is through royalty companies. In a royalty company, the holder gets 1% of any gold that comes out of the ground. If 100 ounces comes out of the ground, the royalty holder gets 1 ounce. Tucker highly recommends owning royalty companies, and he is on the board of one called Metalla. Overall, this book was easy to read, informative, and timely. I have a lot of respect for E.B. Tucker's expertise and experience, and I believe his analysis of the current macroeconomic conditions is accurate. What do you think of Tucker's gold thesis? Let me know in the comments below, like the video, and subscribe to the channel. Thanks for watching.